Hi, I am Ozzie Jurock. I'm the host of OZZIE'S, where we interview interesting, eclectic, and successful people. And today's guest is all of these and then some. It is indeed a great pleasure to welcome Michael Campbell, the host of the best business show in North America, Money Talks at CKNW 980. Welcome, Mike.
Thanks, Ozzie. It's great to have a chat.
Yeah, it's nice to be here. It's kind of interesting. You're so well known. I mean, wherever I go, everybody says, how's Michael? You know, don't ask me how's Ozzie. Where's Michael? What is he doing? What's he up to? But there are no people ask, and the interesting what you do is because you're interested in making people money, or at least tell them how not to lose it. Right?
Yeah, we're in a very interesting time, a precarious time right now. And yeah, my goal is to protect people. We've seen it, for years now, though. 2008, 2009, we actually talked about that in advance the year before, saying the biggest credit tsunami is about to hit us. And we had a friend named Bob Hoy who does a great job. Bob and I chatted about that. Another fellow named Peter Grandich. These are the kind of systemic problems I worry about, that people are going to be roadkill. Like, you wait, Ozzie, it's right now, we're talking, we're coming to the end of 2019.
Roadkill, so not easy recovery.
Yeah, not easy recovery. And people just have to be aware of these things. And that's sort of what I've been doing for years, is trying to, as best I can, give objective financial advice and investment advice and talk about what the big pictures are and economic advice, that kind of thing. And hence,
and
Money Talks.
And of course, you're an undergraduate of Carleton University and UBC, and then you followed that up with a master's in political science at UBC, and then you graduate studies at Sussex University.
That's right, yep.
Is that where you learned all your business advice?
No, it's really interesting. I started being interested, as many people would be, just sort of how does the world work? So I looked at politics. Yeah. And a lot of that was inspired by, if you have good teachers in a certain subject, a lot of times that you gravitate toward that. That's because they make it interesting. But I started to understand you couldn't understand politics without understanding economics. Then I felt, you can't understand economics if you don't understand business. And then I went further and did a lot of work on taxation, because I realized that so much for individuals and businesses is what's a taxation regime. So that was sort of the path I took. All of it was to sort of see, as they said in Fiddler on the Roof, money makes the world go round. Yeah. And, what is it, in the mafia, they say follow the money, whatever it is. Yeah. But you do find out that all of the issues that we're dealing with today, and we could be talking healthcare, you could be talking the environment, obviously personal finances, sovereign debt, all of it comes back to money. All of it comes back. I mean, if everything was free, or if there's unlimited amounts of money, we wouldn't be talking about healthcare reform.
No,
sure. and pension problems and all of these others. So I do still believe that economics fundamentally drives a heck of a lot of our lives and what we talk about.
There's no question about it, and I think that's why people listen to your show. But what people maybe don't realize is you went out of all the highfalutin learning into doing stuff yourself. I mean, At one point you ran one of the biggest waffle factories.
You're absolutely right. I think, having experience in business and
you have Equity Magazine.
That's
editor,
right. I had done a business magazine.
And you worked as a stockbroker, and you were in New York, and
and we started our own business. A partner of mine, a terrific fellow, Ole Elmer. Unfortunately, he's passed away. But we started. I had an idea, and it was before private label was private label. We didn't know what that was. And he and I were talking, and I said, "Let's do private label." And I explained, why I thought that was good. And he was a chef and tremendous worker, tremendously bright guy, and he said, well, let's do it with waffles. And so we did, and we rolled out and became the biggest private label waffle company in North America.
It's amazing.
And I say thanks to him, by the way. I was good at the finance part, but
well, I think you had something to do with it, absolutely. But I mean, you came from sort of Annacis Island and you moved back to the factory.
We had Annacis Island. We went back east first to Moncton, New Brunswick. We went with Premier McKenna there, and he enticed us to come back. And so we set up another factory there because our distribution was getting big and we couldn't do it all from the Vancouver area, So then we added that. Then we added another one in Brantford, Ontario, just outside of Toronto. Same thing, it's all about distribution.
Well, the interesting thing to me is that's why to me you're so, and forgive me to make your head swell, but you're so brilliant because these waffles that you then sent to the United States forced you also to look at currencies.
Did I ever get a first-hand thing? I was just thinking about this because I think that if you could only get one thing right, you'd get the US dollar right, because commodities are all priced in US dollars and that kind of thing. But where it actually started, as I was at the University of Sussex in England, I had a scholarship, and it was fixed though.
Yeah.
It was in Canadian dollars. So every term, I can't remember the number, but it was something like you got $1,500.
Yeah.
And then you'd convert it to British pounds. Well, I noticed, without knowing anything about it, 4 months later, a new term comes up. Well, I didn't get the same amount of pounds. And then the year after, oh my goodness, did I ever not get it? And it put me in touch with currencies. As you say, if you're going to be in the business of exporting, it was all about understanding currencies in the US and Canadian dollar.
Hedging, and and then you also realize no matter how much you know or think you know, I mean, I invested in the United States, and I had some US dollars, and I was going to bring them back, and then I talked to you and I said, I would wait, right? And then I followed it up. Not that I didn't believe you, but I thought I talked to Victor there, and both of you agreed that, this is not the time. Yeah. And boy, did you make me a lot of money by doing nothing.
Well, I remember though when you started to talk about after the financial crisis, the 2008-2009. We weren't long after it. We're by 2011, and you were saying, I'm going to go look in Phoenix.
Yes.
And I remember saying, but thinking also, you're about to make a lot of money on the U.S. currency exchange. And I think one of the things that I'm proudest of what we've done on Money Talks is get these major trends right. Yeah. Because for most people, they're not sitting there trading back and forth. That's not the majority. They're not even making investments very often. So if you get the big trend right, which in this case is when there was trouble in the world, money went to the U.S.
No question.
And it's still happening though to this day. You still read people who are a little confused about why the U.S. dollar's at the levels it is, near high. You've got the U.S. stock market and the U.S. bond market at near highs. It's all about where safety is.
Sure.
And so that's the fundamentals that I understood about how currencies move.
And that is so true. I think Martin Armstrong talked about that, I guess, 20 years ago when he was at the original shows. By the way, those original shows, you took them to Kelowna and you took them to Victoria, right? The World Outlook Financial Conference went even to the smallest center.
Yeah, well, Martin Armstrong is who I consider the best economic forecaster in the world. And so he didn't know what he was getting into. So I chatted with him not that long ago and saying, have you forgiven me yet? He said, about what? I said, we went from Vancouver to Victoria and took one of those small, like 6 or 8 seaters up to Prince George. Then I took him over to Calgary, up to Edmonton. We used to do, and we still do an Outlook conference, of course, which you've appeared at numerous times. And it's just a way of having people focus their attention for just a couple of days, hearing some of the best people that you can find in the English-speaking world.
But the thing was, it was also sellout everywhere.
Oh, absolutely.
I remember I joined you in Kelowna, I joined you in Victoria, and the rooms were packed. And I think that's why you said, you know what, we're going to do one, and we're going to go the biggest one, and we do it the best way. And I don't think you've ever had less than 1,200 people.
Yeah, we've sell out. We've been lucky. We've sell out, but I think part of that is one of the things I bring to the table is after doing and having the opportunity to interview people and chat with people in the business for, I hate to think how long, Ozzie, I really do. I mean, I didn't have gray hair, and now it's far enough away that I can claim things like I was good looking when I started this stuff, and no one can really check that out. You need historical records for that.
Oh, I can tell you, you're still very good looking like that. But now you have to reciprocate that.
Yeah, well, that's why I'm glad it's a podcast, and of course everyone listening today knows how good looking you are. But they don't know that you're wearing lederhosen right now, which is just added to the theater of the mind.
Still a big dark secret.
Yeah, there you go. But I just remember deciding that let's do it there, because then literally I sit back and say, who's got the track record? Who's really good at what they're doing? And fortunately, you form relationships, and they've been lucky enough to come out to Vancouver.
Well, and the thing is, when I look at there seems to be such confusion. For me, going to the United States was relatively easy, because that's exactly what I looked at, is that the money, if I'm a Belgian pension fund manager and I want to invest $1 billion, do I do it in the euro or do it in the Chinese currency, who probably is going to drop its currency to offset the tariffs or whatever? No, let me go for safety. I go to the States, and at the time I have a slide in my own slideshows where France's economy is California, and Canada is Texas, and all the world's economy together. You have a country like that has a gross national product like that, and I'm running away. So we went into Phoenix, and we did very well. But the key was that I did a lot better, because you looked at the overall picture and said the US dollar is going to go up because of all that money flowing in there.
Well, it's one of the interesting things. It depends, obviously, if you're a doctor and you're trying to diagnose someone and they've got a heart condition, you keep looking at their feet. You're looking at the wrong thing. So if you understand that what you're really looking at is, when someone says to me, Ozzie, hey, Mike, where's gold going? All they're asking me is money going to flow into gold, or is money flowing out of gold? It's always about where the money's flowing to see where an investment, and economies too. I mean, if you own a store and someone says, is it going to do well? And I go, well, are there people and money coming into the store? Yes. Oh, you'll do better.
Sure.
And if no one's coming in the store and they don't have money? No. It's countries. I know that sounds simplistic, but it's actually the foundation of understanding why things move when they move. So, for example, people get confused by politics sometimes, or policies in politics. And I say, just ask yourself, did that encourage money to come in?
Yes.
Or did that encourage money to go out?
Absolutely.
And there really is no other way around that. And then you dig down deeper. Like if money's coming into the States, for example, you'll think, okay, but where is it coming? When you look at real estate, you always go, okay, so I want to look again where the money and the people are going. And then you decide, okay, this is a good place. And they'll have reasons around that. That's the next level. The first understanding is, where's the money flowing?
No question, man. People will say that values go where people go, and they go where the jobs are, because the jobs give you the money to have a life, right?
Yeah.
And so the interesting thing is those basic principles. So you've taken them a step further, because on your radio show you bring in guests from all different aspects of the spectrum, right? So if I'm a stock market enthusiast, well, you have all sorts of different looks at the stock market with the other experts, even, and then you have your own opinion, which people really value, because today's hosts all of the time, they're on the one hand this and on the other hand that. You're very, very clear about which direction we're going to go, and right now you're starting to think, hang on to your hats a bit.
Well, I think we're in the transition phase. You know, we were very clear in March of 2009, get money in the U.S. stock market. Never changed. Every time we had a big dip, you might remember in late November, December of 2018, of last year, what we had was huge drops in the markets. And I remember very clearly saying, it'll be a buying opportunity early in the new year, at the end of December, because tax loss selling will be finished and we'll all pile in. But it came from the fundamental understanding that we're not finished that trend of money coming to the US. But as you've just said, now we're at an interesting part. I think that ends in about 2 years.
Okay.
But before it ends, you're still going to get way more problems in Europe, and money's going to come into the States. Yeah. So I think it ends with a spike. Like, we've watched the strong US dollar against the euro, for example. And my bet is we ain't seen nothing yet. It won't be a straight line, but and maybe dilly-dally, and especially with a lot of volatility in the first 6 months of this coming year, 2020. But there will be another push of money coming from other parts of the world, whether it's emerging markets who've got tremendous debt problems.
Sure.
If you're in China, and I remember when the upper end of the Vancouver real estate market was going up, as it was in Melbourne and Sydney and Singapore and New York and San Francisco. And a lot of people were analyzing it and going, gee, that's way above people's income. And I'm going, that's not what this is about.
No.
Do you trust, if you had a lot of money and you're in China, do you trust the Chinese government? We're about to see another phase of that. How anyone would stay in Hong Kong now. And keep in mind, as you know, there's 300,000 Canadians there.
Exactly. We're predicting 100,000 of which will end up back here in the Lower Mainland.
So I know right away that Singapore will do fine, because that'll be a big choice for if you're going to stay in the Far East. Australia, Canada, and Vancouver being the number one destination, that money's still going to flow. And it's not, this is what it's kind of interesting. If you had, I'll just use this as an example, if you had $100 million and you were worried about the Chinese government, you don't really worry whether you're paying 1 million or 2 million more than maybe market value would be.
Sure.
You're trying to protect its safety. We saw that, by the way, when Ukraine was invaded. $64 billion went into the London real estate market within 6 months out of Ukraine. That made sense. Why are you staying there?
We use the Organization for Foreign Investment in Real Estate. It's an international organization, and they rate countries on safety and health and all these kind of things. Well, Canada went from number 11 to number 3 right after the US and Germany, just on the question of safety.
Yes.
And so when we are rated like that, and so I look at that from the point of view, will people come here with their money, and that means will real estate recover? And so the guy goes into Dubai or Germany and to Berlin and to his financial advisor, where would you go? And I said, well, what's your motivation? Jesus, I got to get out of here. Well, then you might want to take a look at Canada. Safe banks, political system. Michael, you and I may not like what we see sometimes, but it's
absolutely
safe. The outsider says, I put my money in the bank Friday. It's still there on Monday. Maybe in China, it's not.
Yeah, but one of the things you're pointing to, it's all relative. It doesn't mean what my absolute opinion. And by the way, I don't think my opinions are valuable. The money's already telling me where it's going. You know, I mean, I don't like rain either, but I noticed it still rains in Vancouver. You know, so it's really a tough thing when people come to the various investment markets. That kind of opinion doesn't work. You have to have something else going for you. So it's a relative decision where your money's going to be. It's got to be somewhere. One of the questions I'm getting now is, gosh, I'm worried about some of the things I'm seeing. Where should I put my money?
Right.
So they're asking me to compare the UK with the Brexit uncertainty. They're asking me to compare that with Singapore, and that's what international capital does.
No question. And you look in Germany now, how can anybody put their money down for 30 years on a negative basis? It's just eye-opening, eye-popping.
Now, here's an interesting thing, though. You brought up one other aspect, which is mind-blowing to people, is a negative yield bond, which is just simply, give me $1 million and I will guarantee to give you 950,000 back in 5 or 10 years, whatever the negative rate
Aren't
is.
you happy now?
Yeah. So, but this is interesting because people aren't doing that.
Right.
There's not another side to that equation. So it's the European Central Bank has stepped in and is buying and selling the bonds.
That is such a fantastic point. I had nobody ever said that before. I mean, everybody says, well, why would anybody do it? Well, they're not doing it.
They're not doing it. And that's why their bond market's broken. But I'll give you another thing that leads to another big issue here. And that is money's out of circulation. So let's say you are in Germany and you do have $1 billion.
Right.
And you're saying, I'm not buying that negative yield bond.
Right.
So now what are you doing? Well, you'll move it to the States to get a better yield.
Yes.
Or maybe you keep it in safekeeping somewhere because you say, well, I may need the cash right here.
Yeah.
So I'm going to keep it in a safety deposit bar, or the equivalent of a safekeeping.
Sure.
Well, that money's not circulating. And we're seeing signs of that problem, a liquidity problem already. And that's what's so fascinating. When you said a few minutes ago that I'm a little worried about what's coming, that's the underlying reason. I'm worried about liquidity.
Yeah, and the outcome is so silly. You look in Denmark, for instance, you're going to get a 10-year mortgage at minus. So you're actually paying back less.
Yes.
Not much less, only $900.
Fair
maybe
enough.
$900.
But it's like free money, basically.
Yeah. Well, the reason is, of course, they're granting this logical negative interest rate. So they have to be logical to you. If you got it at 0.5% below, it's silly. I mean, any person on the street, you ask them that, is this a good business decision? They got to say, this is idiotic.
Yeah, to be the lender.
That's right.
They want to be the borrower at that side. If they're asking me there on two fronts, I would rather be a borrower there. But wait, then I'd put the money in the States. I wouldn't actually buy there.
That's it.
I'd borrow there and move it.
You may not get much in the States, but you are getting a return.
And the euro is going to be much less, so you're going to convert it back. I still think Europe has so many chapters to run here. I mean, their banking system's in trouble. I think one of the big underlying stories is Deutsche Bank. But you've also got the uncertainty. We have British election results, but then it's going to be Brexit. And then what does Brexit look after it goes through? There's just so much. They have a brand new head of the European Central Bank, Christine Lagarde.
Print.
Yes. Then you're going to, Mark Carney, who's the head of the equivalent of the central bank in the UK. He's resigning, as is Stephen Polo's not seeking a second term. There's a lot of changes coming.
Yeah, and then of course the British. He used to be our finance minister.
Yes,
he was always with a very level-headed
central banker.
Central banker. Yeah. Well, the world is an interesting place now. I think I saw you recently put out a piece of paper in which you said there is so much very specifically tough going on in the world, and nobody talks about it. For instance, the idea that you were talking about that in September overnight borrowing rates had a magic performance.
In case people aren't aware of this, so September 16th. One night, money is lent overnight. One bank to another bank. They'll lend the money overnight. Well, all of a sudden, someone said, "I don't want to lend. I don't know if I believe you that you're giving it back to me the next day."
Exactly.
So they stopped. Well, they said, "Okay, well, I was going to borrow at 2%. What if I give you 3? No. 4? No. 8? No." It went to 10%. This is a really key point for people to understand. It's quite mind-blowing. Can you imagine if your borrowing rate was 2% today and 10% tomorrow? Well, that's literally what happened.
It's a 500% increase.
Yeah. So the central bank had to step in because no one was willing to lend. And the Federal Reserve stepped in and started to do the lending. They're still doing it up to today. It's months later. It's still about 60 billion, 70 billion a month, going in there to keep liquidity in that marketplace.
And that's the real thing here is faith is going, right? I don't have any faith to get the money back, right?
But that's the key. If somebody said, what's the underlying movement of everything? It's about confidence. And the biggest trend in the world today is the lack of confidence.
Right.
And it's increasing in government. And one of the other big stories we're seeing is, keep in mind, we had the yellow vests, protests in France.
Right.
They've given way to the pension change protests.
Yeah, they're
pensions are fascinating because it doesn't matter which political party you support. There still is this number of people retiring. We have a good idea through actuarial accounting how long they're going to live, what we've promised to pay them in pensions, and what we got.
Yeah.
And if there's a big gap, you got a problem. Now, I want to just be clear. In Canada, our Canada pension plan is secure. It's well funded. In the States, their Social Security is not well funded.
No.
What they're talking about in France is Emmanuel Macron has said, wait a second, we can't have people retiring at 50 or 55. And that's what, literally, that was a huge problem.
And a 4-day week. And
all that stuff. And in 2010, when we had Greece start going down, that was one of the big issues. We've made promises about pensions that we can't keep. That is what, when we mention again, that's the kind of stuff that's going to become way more obvious in the next 2 to 3 years.
Well, and that's really the point on the euro too. I mean, that Greece example is a good example.
Yep.
They went on strike, 1 million people, because the retirement age was dropped from 50. They wanted it from 55 to 52, and they only wanted to leave it. At the same time, Germany went from 65 to 67.
Yep.
And there you can really see why the euro is wonky, because somebody is carrying the freight and somebody else isn't.
Well,
it's Club Med, as Victor calls it.
No, but one of the things that we said very clearly on Money Talks was in 2010 that Greece was the canary in the coal mine.
Yeah.
And it was very hard for people to grasp, but the European Union was going to come apart. Well, now it has. I mean, Britain's leaving. So that's the first step.
And others are talking about it.
Yeah, we also have lots of anti-EU governments elected throughout Europe. Italy's struggling there, Austria, Poland. They've got huge problems there. So that's why I'm saying Europe's not done yet. And the thing that I'd love to get across to people is tomorrow morning you can wake up with another major news event. A lot of this stuff is bubbling under the surface.
Yeah.
Which state or city in the U.S. is going to follow with not paying their pensions? Because we already know Chicago's hopeless. Stockton, California. Detroit had huge problems. Atlantic City, Puerto Rico. It's still not bubbled to the surface in people's consciousness. So I just sit there going, well, wait till Illinois goes, or Kansas City Teachers Fund, because the Dallas Police and Firemen's Pension Fund's in trouble. It's that kind of thing that starts.
Well, and it's so vital. I'm surprised. Somebody, and I wrote about it in my OZZIE'S newsletter, about somebody was saying that people are out on strikes and it's a bad thing. And I said, what it does show to me is that inflation, I talk about the most unreported inflation of all times in hard assets.
Yes.
While at the same time, we can have an outright deflation in commodities, which we've had. It's new. It's not the 30s. This is the 2020s. But the point I'm trying to make is that if we are concerned about the outcome for us ourselves, you take a couple right now that earn $50,000. They cannot meet ends meet. Food is up 17%, not 2%.
Yeah.
Parking is up, rent is up 200%. And so you're looking at the inflation, the cost inflation, and they're being told the headline inflation and the core inflation. And they say, I don't care. So they go to their boss, I want a raise. And he says, well, here's 2%.
Yeah.
Well, 2% doesn't hack it. And so we're going to see just on that level alone, we will see much more massive engagement by the individual saying, I just got to have more pay.
Yeah. But it's fascinating to see that the cost of living was the number one issue on several polls coming into the Canadian federal election.
Yeah.
And what they're looking at, and we've just got another great example where we have the federal government announcing a reduction in income tax, and after 4 years it'll save a family of $600, an individual $300. But fair enough. At the same time, depending what city you're in, they're raising property taxes
on everybody.
And where
Vancouver
you are
on 9%.
Yes, I was going to say where you are is 9%. But that's just one example. Oh, so that chunk of whatever I gained from the federal level has now been eaten up municipal. But as you said, that list just keeps going on.
Yeah.
I mean, it could be if you're in a mandatory insurance jurisdiction like people in British Columbia are.
Yeah.
That was another huge jump, 3 times the rate of inflation, the official inflation. So, and as you say, that's where back to the Canadian dollar. People say, well, I'm not interested in that stuff. I say, well, I don't mind. But just know when your groceries go up, your currency's playing a big role. Just like it's more expensive to travel elsewhere, especially the US. Absolutely. You've noticed it doesn't buy you as much when you convert your dollars. So all of this stuff is coming to play for individuals.
Yeah, no question. And in the United States, as you say, it's city to city is the problem. The funny thing is in the United States, you have 5,000 banks that also trade on an overnight basis. And now I really know you. You're a small bank. never give you any money, and that's what happened in 2008.
100%.
We at least only have 5 banks here, so we are more smaller banks, notwithstanding, but a small amount of banks that are much better financed.
I think that's, by the way, the number one risk I see is a systemic risk of liquidity, and that's what you've just described. Is that all of a sudden I'm not making my money available?
No.
And that's what happened with those overnight lending rates from 2% to 10%. I always say that's what a no-bid market looks like. There's nobody on the other side.
Right.
I'd rather keep my money. I've lost confidence, as you said. When it came to 2008 and the credit crisis, what the problem was is that you're going, I don't know if you've already lent money to Bear Stearns, so I can't lend you anymore.
No,
it looks better in my pockets. Yeah. That's the problem, and that's the problem I see going forward, which, by the way, for real estate, here's the thing that is important, or borrowing, is I get asked this, well, where will interest rates go? I said, it won't be the central bank that raises interest rates.
Right.
Central banks do not control the bond market. Right. They're very, very short-term rates are they influencing. But they don't control whether Ozzie Jurock's prepared to lend $10,000 to a company or a government. They don't control that.
Particularly long term, or for 5 years or 2
And
years.
if you start losing confidence, you yourself start losing confidence, you go, just for now, I'm not going to do that. Yeah. That's how rates spike. So that's why I said at the time that overnight lending rate spike was incredibly instructive, and it was a warning.
Well, and I think that's why people are going to your show, because nobody else talks about this kind of stuff. The other thing, of course, is you're also, I think for months you've been talking about the liquidity problem at the Deutsche Bank, for instance.
Yes.
And so you look at these milestones that really say, hey, that bank is in trouble.
Yeah, when I start with a big picture, there's lots of ways of doing this. But I start with a big picture, saying, okay, so where's money flowing, where the problems are. I've got to get the currency right, and I've got to get where that currency's going. So you get the US dollar right, then it was easy to get, okay, why do they go to quality US stocks first? It's because it's like brand name stuff. I'm sitting there and I'm worried. I'm in Brazil, I'm in Argentina, I'm in Ecuador, and I'm sitting there going, I want to move my money into the stock market in the US, so I'll go to names I recognize. So that's why we said that level was going to move first, and then it flows down as people look for deals. They go, gosh, that Amazon's pretty darn expensive. That Facebook's pretty, or Apple. So I'll now look for a second tier stuff. But the real key is, so you get that part right, and then you sort of start, as I say, my approach is to start with that, because if you do get that right, you're going to be okay. It's just like real estate. When you predict, Phoenix, and you got in there in 2011, 2012 aggressively, well, it really didn't matter what you bought. Can you find anything that didn't? That's what I mean. You got the big picture right, and yes, your expertise can now drill down and do better. You are always going to be fine there.
There's 2 points there. Like, first of all, in Phoenix, you could buy something for 70,000 and it rents for 1,000. So you have cash flow. You can weather all storms.
Yeah.
At the same time, say the magazines like The Economist, they're always matching everything to affordability. Yeah. So if the rental value is only this, and then prices should be that, never worked. UBC has a study out that in Vancouver for almost 50 years, we never were affordable. We always needed
that's what I'm saying.
So you want to live in New York. So those things notwithstanding, though, those big moves like Deutsche Bank doing, we have a liquidity crisis, we have a pension problem, social unrest, we got European banking problems, an emerging market, and all that. Now, you gotta tell me what we're going to do about it. I know that you have a mega conference come up. Almost every one of these subjects is on the forefront as to how number one, you make money still, but number two, very importantly, how not to lose money in 2020.
So you're absolutely right. You've got to get these trends correct. And so this trend is, we're still in play, the trend that you've been witnessing since really somewhere 2009, 2010. Money's still going to the US, US dollar the strongest. What I'm looking for is a turning point. And let me explain that. So if you're sitting there in Brazil, are you saying I'm going to move my money to Venezuela? Of course not. So you're making a choice and you're saying, okay, the US is safest. But you've got to get that nobody's choosing Europe. No one's choosing the yen. At this point, they're certainly not choosing the British pound. Well, Canada's like a blip. Canada can't be a first choice for major amounts of money.
Sure.
So it's still going to be the US. But here's the thing. What happens when the pension crisis hits the US, as an example, and Illinois has a problem, or Chicago has a problem? And again, I'll come back to real estate, just so you know. So Chicago has about a $30 billion public sector pension shortfall.
30 billion.
Yeah, the city itself. So they've been raising property taxes.
Yeah.
So that means people don't want to buy their real estate there after a while. So that affects the real estate market. You got to know these things. Warren Buffett said, don't put any money in a state that has a major pension liability, because they can only solve it by reducing the pension or raising taxes, or both. So it doesn't make it attractive. But yeah, we'll be talking about these major trends, because at some point, and this is the point I'm looking for, people will go, I don't like the US either. I don't like Europe, and I don't like Japan, but I don't like the US either.
Yeah.
Then what's the next phase? That's when they come and say, I don't like paper currency.
Right.
I like something else. And I suspect that kicks off the next commodity bull market.
And
which
then you
we
have
may
a
be
speaker
seeing,
on that.
Yeah, we'll be talking about exactly that, because we may have been seeing inklings of this in the gold market. There's some big money's moved into gold, and that big money doesn't care what it does in the next 2 years. They care what it does in the next 10 years.
They'll take the longer
So they're
approach.
just taking some positions there. But it's a position that says, I don't like paper currency.
Right.
So at the conference, you've got, we want to set you up to have your assets in the right areas, to know what points you're looking for to get out. I mean, you mentioned Victor Adair. One of the things I love about Victor's work as a trader, he would never enter something without knowing the get out point. And I always say that with cringing myself, because talk about learning a lesson the hard way. I mean, can I just stand up now and beat my head against the wall? Because I think I did that. There's a great guy named Dan Millman who wrote a thing called The Peaceful Warrior.
Yeah.
Then he wrote a follow-up, The Warrior Athlete. And he had a saying that says there's 7 major lessons in the universe.
Yeah.
The key is, how often do you have to learn them?
Yeah.
Well, I took that immediately to the investment markets. Like there's only a few things you have to really do right. It's how often do you have to learn it. So when I talk about knowing your exit point, that's one of the things I had to relearn, and it really becomes a case of, when are you going to learn this?
But that's the key. Victor is also a day trader, so he has to be really sure. But I preach the same thing as an investor in real estate. This is how I get in. This is what I'm looking for. Under what circumstances can I sell and still make a profit?
A great example from real estate, though, is that you would look at in-migration numbers, for example.
Yes.
So one of the things, so that means you can get these lulls in upward movement, like you've seen in Vancouver over decades, as you've pointed out. But it always ended up going higher.
Sure.
Well, no wonder, because the population kept increasing, and money comes into that center, and it comes into other centers. We can name them around the world, that they become recipients. Like, for example, when the foreign buyers tax was introduced in BC, and I think it was August 1st of 2016 off the top of my head. Well, you and I talked right away. Oh, good, Seattle's about to go up.
Exactly.
And then when Toronto and Vancouver get together and put in these restrictions, Montreal's going to go. It's not that tough.
But the thing is that all of these markets, and we talked about that on the air last week, all of these markets are recovering big time.
Yeah.
Right? And so I made a speech to the developers conference in Surrey for the Board of Trade 3 weeks ago, and I said to them, look, you have 1,100 people coming to Surrey. There is a different opinion. It could be 1,200 a month coming, but they are coming.
Yes.
You got 100,000 students that want to study. You have all of that stuff, and your real estate is relative in those terms, is still a good investment. No matter what's going to happen inflation-wise or foreign buyers tax and so on. So you'll be looking at different markets on a specific way. What you do in the show, you're doing it, if you attend that show on a Friday night and a Saturday, there's no way that you're not going to leave on Saturday afternoon saying, you know what, I got my answer, because I may have a gold interest and somebody else
Yes.
has a silver interest, and somebody else wants to know, what about the oil stocks? The energy stocks have been beaten down. Is now the time to go in? All of these kind of questions. Where can you go in one spot on one weekend and for literally a price of a dinner get all the answers?
And our goal is to make you a lot of money at that. For example, every year for, it's a dozen years, we've put out what we call our small cap, smaller company portfolio. We talk about other companies too. Well, last year, thanks to, we work with Keystone Financial, and they do a terrific job. That's why they're there. I mean, I chose them for that reason. But it's up 61% this year. It's always been double digit. I'll go to something you've done over the years. Look at the markets that you fundamentally have recommended, and as much as I like you, believe me, I'm looking at the track record, and I'm not kidding. But you were first in the Phoenix area. Then you said, okay, we better get into Vancouver. This is going back 7-8 years. I can't remember off the top of my head. Going back a big chunk. Then, as I just said, we then started to talk about, Seattle's going to do well. And then you said, well, get out of this one here. Well, the track record's excellent.
And that's what I think your speakers, you select them well.
Yes.
I mean, nobody is perfect.
No.
Even you on occasion may have overestimated something.
No, absolutely.
You cannot see this, dear listeners, but he was just frowning at me. He said, me? Be wrong? No, but the point is exactly that. Nobody is perfect all the time. You are more perfect than anybody else I know. Really, I mean that sincerely, because what you do is, when you're wrong, you also say it.
Yeah, absolutely.
I believe this didn't happen, but most of the time you wake people up. To me, that conference, I've had the privilege being there over 20 years, and I stay for the whole conference, not just my speech. I want to be there and listen and learn and see all of these experts that you fly in from all over, and you even have a great conversation with Martin Armstrong.
And I think part of that is that also, I always ask, are your financial, I mean, a lot of people, I always joke, I know they have other things to do with their time, but can you give a Friday and a Saturday, or a Friday from noon, and then Saturday till about 4 in the afternoon? Right. Is your financial stuff worth it? And my thing is, if it's not, well, that's fine. Here's the thing, though, I'll really make clear. The kind of stuff we've been talking about, it doesn't matter. There's the old expression, it doesn't matter if you like economics, you ignore economics and finance. They don't ignore you. We're coming into a period where people have to be alert. We've had an easy time in Canada. Think of, it has not been easy in Europe. No. I mean, there, let alone if we start talking about South America and we start talking about certain parts of Asia, it's not going to be an easy time. And just doing some simple things correctly that we'll talk about at the conference will protect you from the kinds of things you were listing there, whether it's a pension crisis, a liquidity crisis. It's going to be huge. And so that's my big point is, no, don't spend 365 days a year, on this stuff. Come for a weekend. And that's why I'm enthusiastic. I mean, every one of those speakers is worth the weekend. You're not going to get access to them. So I'm just saying.
Well, and they're all there, I mean, I'm going to be there all day. I mean, like I say, I go from speaker to speaker, because where can you get everybody that is anybody in the industry? And then you sort of rub shoulders and saying, well, what about this thing? I happen to like copper. What are you saying, right? I mean, where can you really drill down? Or if who you're drilling down with, maybe just a salesman in a local company. Nothing wrong with them, but there you have the leading speakers. So how do people buy the ticket, Mike? It's
really straightforward, because the radio show is called Money Talks, but go mikesmoneytalks.ca.
And that's the key. It's Mike's Money Talks, and it's .net, not .com.
No, it's .ca. mikesmoneytalks.ca.
Oh, it's .ca.
Yeah,
okay.
mikesmoneytalks.ca, and then you just go to events. And click on, and it's right there. I mean, it's that straightforward.
I understand the VIP tickets now, what almost 2 months ahead, they're almost sold out.
Yeah, I was going to say, I think the VIP tickets are sold out, but the regular ticket, the other thing we offer, because I'd love to get the chance to mention this, I've been very critical of our education system for graduating a zillion young people without any sophistication whatsoever, unless an individual teacher stepped up. I don't know how we gain as a society by graduating people without any sophistication in economics and personal finance. I don't know where the win is on that. Oh, we're better off. That's nonsense. So we always have set aside a block of tickets. And that is if you come and you bring a young person in your life. It's a great sharing weekend. I think it's a wonderful thing that way. It makes a great Christmas present. Come to, if you're out of town, come on in and spend the weekend here and go and see it. But I'm really keen. One of the things when I look at some of the policies that are being passed around the world, and they've clearly been wrong, because no one in Europe stood up and said, hey, you know what? I got a way to get that unemployment rate way up there.
Yeah.
I got a way to have a banking crisis. I got a way to have a sovereign debt crisis. No, they didn't.
All right.
But the public supports things like this because they don't have the sophistication. If you don't know about this stuff, where are you going to learn it?
All right.
So it's very important. And so, anyways, I go on and on. You can tell I'm passionate about young people getting exposure. This is a great place. We're putting our money where our mouth is. You buy a ticket, you have to tell us, I'm bringing someone.
What I liked is, you have these young people, they're interested. They're not just coming there because dad says you must be there.
No.
And they ask questions, and they have a real interest. And like you say, we don't teach it. We don't bring this self-confidence in monetary environment.
Yeah.
The young girls that are going to be married, they're going to manage household finance.
Absolutely. And their own as they get careers and they build them and they want to make investments or they want to buy a house, or an apartment. All of these things. The currency, to get that right alone.
Sure.
I'm going to the U.S. Next year.
Sure.
When's a good time to convert?
Right.
Or I'm going to Europe. Just wait on Europe because you'll be able to buy a country there soon enough. And then you'll be unhappy you got it.
Well, it's funny, I put always in the newsletter, that there are some places in Europe you can buy real estate and at the same time get a passport. And so usually people say, well, is Portugal better or Spain? But last week I got an inquiry that says, why on earth would I go there?
Yes, yeah, exactly.
So I thought, well, okay. Yeah. Well, Michael, look, it's been a genuine pleasure to have you here because very rarely do we get a chance to get an overall view as to what your conference is all about and why the experts are there. So it's Mike's moneytalks.ca that you have to go to, click on the events button, buy a ticket, and if you do, you're going to see us both there.
Yes, absolutely.
Thank you very much, Mike.
Thanks, Ozzie. My pleasure.